Bitcoin is a hedge is one of the most incredible lies ever told. In fact, many speculate that Bitcoin continues to eat into gold's market share. However, the International Monetary Fund has now said what we've always been saying: Bitcoin or any cryptocurrency is not a hedge. A hedge is supposed to be stable and it has an inverse relationship with the market. Bitcoin is neither of those two things. The IMF said that there's an increasing correlation between crypto and the stock markets. In a blog post on Tuesday last month, analysts from the IMF noted, and I quote, "Bitcoin and other crypto assets have matured from some obscure asset class with few users to an integral part of the digital asset revolution." However, the IMF argued that this acceptance has brought along with it the risk of financial instability due to a spillover between the volatile digital assets and equities. IMF's blog post reads, "Amid greater adoption, the correlation of crypto assets with traditional holdings like stocks has increased significantly, which limits their perceived risk diversification benefits and raises the risk of a contagion across financial markets." New IMF research has indicated that while 2017 and 19 saw Bitcoin moving independently of the S&P 500, their daily moves showing a meager 0.01 correlation connection, but that changed during the pandemic. The measure jumped to 3,600%. indicating that both asset classes have begun to move more in tandem. A coefficient of 1 means that assets are moving in lockstep, with a -1 would show they're moving in opposite direction. The economic shock the pandemic brought forced investors to turn risky assets to stay afloat simply because they didn't have a choice. They couldn't count on their jobs and their savings were losing value. Crypto was all the rage, and with the lack of choice, they went there. But the stronger correlation and the drastic and sustained dip that started in the last quarter of 2021 proved that Bitcoin is a risky asset. No amount of median investor hype will change that. Additionally, the organization found that Bitcoin's volatility caused about 1/6 of the total S&P volatility, along with about 1/10 of the variation in the S&P 500 and the returns during the pandemic, highlighting an increased interconnectedness between the two. It included that, as such, a sharp decline in Bitcoin prices can increase investor risk aversion and led to a fall in investment in stock markets. Are we encouraging you not to invest in crypto? Obviously not. We've talked about diversification. We talked about this. I invested in it. All we want you to do is recognize the different rules, different asset classes that should play in your portfolio. Crypto is a risky asset. You can win big and you can also lose big. If you want to hedge, go to an asset that actually is a hedge. And that's gold. It's stable. It moves to the opposite direction of the market. Noble Gold Investments has helped thousands of investors secure their retirement through gold, and we can do the same for you. Give us a call, 877-646-5347 for a no-pressure consultation. You can also start by downloading our free gold and silver investment guide at noblegoldinvestments.com. If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open, and we're happy to answer any of your questions.